Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Monday, June 27th. Stocks on Wall Street are set to open mostly higher, following some fairly heavy losses on Friday. Investors are digesting a report on personal income and spending in May, and we'll bring you all those numbers after the opening bell. But the main focus this week will shift back to Greece, ahead of a parliamentary vote on new austerity measures later this week. The plan must be approved in order for Greece to receive more aid from the European Union and International Monetary Fund. And it could set the stage for an additional bailout for the struggling country. Most analysts believe that the austerity measures will pass by a narrow margin. But Deutsche Bank pointed out that even with another aid package, Greece would still have insolvency issues in the medium to long term.
Moody's Investor Service is also warning about the health of Greek banks. Outflows of private sector customer deposits have totaled about 8% of all deposits since the beginning of this year. But Moody's says the potential for more outflows poses a major liquidity risk for the banks. And if they increase above 35%, it would cause a severe cash shortage. Moody's added that Greek banks will find it increasingly challenging to decrease their dependence on funding from the European Central Bank. Another major concern among European investors is the risk of contagion to other nations, especially Italy. Japanese investment trusts hold a relatively large amount of Italian sovereign bonds, and a strategist at JP Morgan Chase in Tokyo said that if Italy faces the risk of default, a sale of those bonds by Japanese investors would pose a big downside risk to the euro. Last week, the premium for holding Italy's 10-year debt rose to a record against comparable German bonds.
Right now, the euro is posting modest gains, but analysts say it could trend lower throughout the week as the Greek parliament debates and votes on that new austerity package. Although the dollar is a bit weaker against the euro this morning, it's rising against other major currencies, and that continues to put pressure on commodities. Oil prices are dropping back below $91 a barrel. They're also being weighed down by concerns about the global growth outlook and the release of oil reserves by the International Energy Agency. Crude has fallen more than 9% over the past month, and more than double that since reaching a high near $115 a barrel in late April. Meanwhile, gold is holding steady above $1,500 an ounce, following a big slide last week.
On the corporate front, an international takeover battle may be over. Stanley Black Decker appears to have won the contest to acquire Sweden's Niscayah group. Securitas made an all-stock offer for the information technology company in May, but Stanley Black Decker says that an independent committee of Niscayah's board has recommended that shareholders accept its competing $1.2 billion bid. One big stock winner this morning is LDK Solar, up 7% right now. The China-based company said it will buy back as much as $110 million of its American depository shares. After today's closing bell, Nike will report its quarterly numbers. That's the latest from Weiss Research. We'll be back after the opening bell with all the economic data and market reaction.